Hey everyone, this is Charlie Shrem, and you're listening to Untold Stories. This is a show where we dive deep into the lives and personal histories of some of crypto's most influential leaders and find out how the crypto movement truly came to be. Let's dive in. This podcast is presented by Blockworks Group, the only blockchain event and media production company I trust. For exclusive content and events that provide insight into the crypto and blockchain space, visit them at blockworksgroup.io. I promise you won't be disappointed. My next guest today, we're in for a real treat, because whenever you listen to other podcasts, speeches, or other shows, you always hear theoretically about what happened during certain hyperinflation days or during crisis of government, of state, and issues when our governments don't act in the best way possible. We're very fortunate to have Mr. Simon Dix today. I consider him a very good friend of mine. He's the Chairman of Ecstatus Capital. Welcome, Simon. Thank you for coming to the show.
Thanks, Charlie. Great to be on your show, and I'm looking forward to this chat with you.
Simon, most people in the world that especially we talk to and we interact with, and I don't like to use a term like first world country, but in the West, if we have to use that term, don't really interact with the state until it's time until, let's just say, pay taxes. So the first time you really interact with the state is get your driver's license, and then eventually when you get into the workforce to pay taxes.
Yep.
It seems like where you grew up in Zimbabwe, you've probably had to interact with the state, whether it be a positive or negative way, much early on in your life. Do you remember that first interaction or some first interactions you've had with the government of, was it Rhodesia at the time?
Yeah, it was. I was actually born in Rhodesia, which is now Zimbabwe. The first 11 years of my life was interesting. There was a sort of a countrywide guerrilla war going on. Lots of lives were lost. But basically, that's when the minority government was overtaken by the majority, which led to independence in 1980. So I've been through, a country where we've changed government. We've had interesting political leaders there, which, we had a dictator in power for 38 years. He's now left, Robert Mugabe. And there's been a lot of changes for the country. It's affected people. It's led to hyperinflation, collapse of the currency, and a lot of those similarities which I've been through are glaringly in our face today and are quite concerning.
Were you aware of any of these things as a 10-year-old living in Rhodesia, Zimbabwe?
Well, not really. I mean, we only probably until a few years ago, I was pretty oblivious to how the whole system actually worked. Fortunately, I got involved with IT solutions in the banking space, and I had my eyes wide open in terms of how money is created, how we are controlled by governments, and how we basically have our wealth and our freedom ripped away from us. So, my time in Zimbabwe, growing up in Zimbabwe and having to move countries to South Africa, coupled with the fact that I've had this experience in the banking space, have all led me to where I am today.
Why did you have to leave at a young age to South Africa?
Well, basically went through schooling in Zimbabwe. First 11 years, like I said, was a war. I came from a very conservative family, and the vision was to finish my schooling and then maybe go on to university or college, as you would call it, and study business. That really what the vision was. It didn't really turn out as planned. Everything.
Does it ever?
No, it doesn't. Everything happens for a reason. But in hindsight, it all worked out pretty well. So, finished my schooling. Had a great experience at school in Zimbabwe. It was a wonderful place as a young guy to grow up. We had lots of freedoms. We could walk around. Yes, after independence, there were freedoms, and I think the country was in a good space for a while. But like any country, what happens is governments tend to lose control. They embark on different programs, and ultimately, in Zimbabwe's case, they printed too much money, and they lost their way through hyperinflation and collapse of the currency, which happened several years later.
Well, how did that play out? So here you are. It's Zimbabwe. They changed the name of the country. It's majority rule government now. The people are happy. You have a new leader, and everything should go well. I mean, this is a familiar story. You see it happens all the time. What happened?
Well, I mean, 1980 independence. We had a new government under Robert Mugabe, which came into power. And for the first few years, Zimbabwe was on a strong trajectory. It was we'd had
One of the strongest economies.
we were the breadbasket of Africa. The economy had become very self-sufficient, and this is all hard to believe. Having had sanctions on the country for many years, there was a lot of local industry, a lot of manufacturing locally, and that really did boost the local economy. Um, but in time, that all changed, and I think after my leaving school, I embarked on a very different journey for a number of reasons, and we can go into that. But it took a very different route in my life. I didn't go to the traditional university and on a path that was sort of mapped out for me in life.
What did you end up doing as your first career?
Well,
Was your first
my
job?
first
You walking around on the streets?
Well, it goes back probably to when I was a kid. Actually, I was, like I said, I came from a very conservative family, and pocket money was one thing that my father was a little bit tight with. So, I think my first business venture started when I was about 12 years old, where I started my entrepreneurial idea of selling golf nets to the local members at the local country club. And my father was my business partner in this little venture, and earned some pocket money. And then the bug had bitten, and after that I decided, well, I had to be an entrepreneur, and I didn't know it at the time. And then in my final year of school, I was unfortunate. I was involved in quite a serious car accident, which set me back a little bit. And I had thought at that time that I was going to just go and do a BCom or a Bachelor of Business Science, something like that. And I wasn't going to possibly make the grade to get into university. But like I said, everything happens for a reason. And like any 18-year-old, you want to conquer the world. So I left Zimbabwe and I hitchhiked a lift to South Africa, where I realized very quickly that I didn't have any money and I needed to find a job. So what do you do when you need a job? You phone up the sales manager of the most successful office automation company in the country, and you demand a meeting with them. And I did this, and I remember very clearly, 18 years old, walking into his office, and he looked at me, and I had this long suit on, which was a bit too big for me. And he said, "Well, how can I help you?" And I said, "Well, I'm looking for a job in sales." And at that point, he said to me, "Well, what experience have you got?" So I said, "Well, I mean, I've got no experience, and you obviously need to give me some experience so I can gain experience." So he packed out laughing and said to me, "Well, I'll tell you what, sell me this pen." So I thought about it for a second or two, and then I said, "Well, how much are you prepared to pay for it?" And he said, "R2." And I said, "Right, it's yours." And from then on, he realized, well, this guy could probably sell, but he's a little bit wet behind the ears. So I tell you what, we'll offer him a job in the technical side of the business. So the next day I came to work, and I was a technician wearing overalls. And I went and asked my boss for a pay increase, which, as you can imagine, didn't go down to
On the first
a
day?
second day at work. So I did leave it a little bit. And then, he said, "Well, you're not worth anything to the company because you don't have any experience." So I said, "Well, you better send me on some training so I can gain some experience and become an asset to the company." And that's what happened. I got trained and then shipped off to some remote part of the country for a year. After which I went into sales, which I thoroughly enjoyed. And
What were
I
you
was
selling?
selling office automation, Xerox equivalent, Xerox type machines for the local company called Nashua. And it was a great company. It was a great training ground. I learned a lot about sales, about rejection, about cold calling, about putting yourself out there. And all of these jobs stood me in very good stead for what was down lay ahead in the future for me. So I did that for about a year,
With
um, and then decided I was going to go back to Zimbabwe and start that franchise in Zimbabwe. I was 20 years old at the time.
Was South Africa going through sanctions at that point?
Yes, it was, but South Africa was also it was a strong economy compared to where I'd come from. So I wanted to go back to what I knew, and at that stage, it was Zimbabwe.
I read somewhere. So you just described that you sold equipment that um, that was the equivalent of Xerox. And I read somewhere that, growing up in South Africa, or growing up in the United States, excuse me, I apologize. Growing up in the United States, our products are made everywhere. TV's made in China, our chocolates from Germany, or everything's from everywhere. Um, but growing up in South Africa, I had read that everything was made in South Africa. It was wildly, because of the sanctions, they embarked on a program to basically produce everything internally. So your TV was actually South African, correct?
Yeah, I mean, and in Zimbabwe, it was probably to a greater degree. With with the sanctions in Zimbabwe, what happened is that all the local industries flourished. The currency was basically pegged. It had a very strong agricultural base, and it was the breadbasket. It had a massive agricultural surplus. And the country did well. I mean, you look at the rest of the world today. You look at the US today. I mean, everything's been exported to the rest of the world, and we know how that's turned out, and where it's all going to end. And I think it's all going to end very, very badly.
So
Uh,
that's one extreme, right? South Africa's extreme in those days was that it produced everything.
yeah,
It almost imported nothing.
correct.
Did it export much? Did it export?
Well, Zimbabwe exported a lot of tobacco, so they were the second biggest tobacco exporter in the world. And it also exported some minerals, gold, very strong gold mining infrastructure at the time, um, and uh, and certain other agricultural products. Maize was being exported, so the country was on a very strong financial wicket at that stage.
So now we live in a world though where people don't really make anything anymore. We're kind of exporting. That's what my grandfather would say. But you young whippersnappers don't produce anything. Get it your hands down and make something. And I say, well, I make a podcast. That's making something, right? But but we live in a world where we don't really we all kind of trade with each other, and that's the business of today. Trade with each other. Do you think we're better off doing that versus where countries were very independent themselves and could produce their basic necessities for their populations?
No, not at all. I mean, if you look at the economy globally today, I mean, pretty much everything's been exported across to the east. I mean, China's obviously manufacturing for the world, and obviously holding so many US Treasury notes, and obviously they're concerned. And you just have to look and see what they've done in Africa in the last few years. I mean, they've been acquiring gold mines and stockpiling gold, and that pretty much tells you their lack of confidence in the dollar long term. So, any country that's exported all its manufacturing have really got to get that back to their countries and build their local industries.
And what happens after that?
Well, I think the US is in a different position because they've got the privilege of the US dollar at the moment. So for most countries, they need to build up local manufacturing so they can export and they can have a strong balance of payments. The US, on the other hand, is in the very fortunate position that they've got the US dollar as the global reserve currency, and it's been sort of there since World War II, where virtually every currency was pegged to the dollar. But more importantly, since the 60s, you've got the advent of the petrodollar. So, these days, the fortunate position for the US is they can print as many dollars as they want out of thin air. And they can basically export those dollars to the rest of the world, who each country has to manage their balance of payments, balance their budgets, and build up their forex reserves for their imports. So today the US is in a very fortunate position, but I see that changing in time. And I think we just have to look at the whole history involving money and what is money, which paints a very gloomy picture for where we are all today, and for those very reasons, the reasons why we're in alternative assets.
So you're a young kid and you're in Zimbabwe opening up the branch for the company that you'd worked for, Office Automation. What did you do next?
So I built this company. It was a family business in Zimbabwe. We had it for a number of years. It was a great training ground. And like I said, my father had been a very conservative man. He sold the business after a couple of years, and that was probably the right decision. I had a 5-year restraint on me at the time, which I was a little bit bitter about, and didn't really get anything from the sale of the business. So I really had to start again. And I take this as my PhD in life skills. I didn't have a college degree under my belt, but that was the greatest thing that ever happened to me, I suppose. And at that time, I remember computers were just coming onto the scene. I remember sitting and watching a video of a company in the US that were listing. They were going through their IPO and they were promoting document management. So I wasn't really interested in the IPO. I was more concerned about the concept of information management at a time when computers were just coming out. So the whole concept there was I didn't want to sell PCs. I didn't want to sell servers or networks. I really wanted to focus on a corporate's most valuable asset being its information. And so I started a business with a colleague of mine. We didn't have a lot of money. We were two young guys, big ideas. We were ready to conquer the world. But our vision at that stage was to provide information management solutions to corporates. We believed that the most important thing was not the piece of paper, but the information that lay on that piece of paper. So what we did is we found ourselves a big brother. We started a business partnership with a big company in the US that you're familiar with
Sure.
called NCR, National Cash Register. And at the time, they were the leading company in terms of retail and banking. They were into ATMs and check processing, and they were sort of our big brother in terms of getting this business started. We would provide the software solution for their clients, and they would provide the servers and the networks and the databases. So it seemed like a pretty good idea in the beginning. And that went pretty well for a while. We all did okay until the time came when NCR decided that they were going to go at it alone. At that point, we we were a little bit bitter about it, but we licked our wounds and carried on. And we were building up quite a nice little business at this stage. One thing I wasn't too fond of was the fact that every year the annual software licensing, which was about 18% of the capex of the software, was payable to the software vendor. And I said to my business partner at the time, I said, we need to be the guys managing our own destiny and creating our own software, and we need to do things differently from what we had seen with the NCR and in the marketplace. There was another company called Unisys who were very big in the marketplace in the bank space, and our little information management solutions were going along nicely, and we decided to develop a solution that was everything that their systems weren't. In other words, they had to be hardware independent. We could drive any hardware device, any scanner, any equipment like that, any server, any PC. They had to be database independent. So Oracle, SQL, whatever the case may be, we would use it. And they had to be modular and easy to use. And that's what we did. We took on resources and we built our own software team and over the period of about 2 years developed our own application for Africa. And then what happened is there was a startup bank in Zimbabwe at the time, and they were not happy with their what they'd seen in the marketplace with the traditional check processing solution providers. And that
They were happy with hyperinflation, but they weren't happy with their software.
Well, the hyperinflation didn't happen at that stage. It was much later that hyperinflation kicked in. So in the early days, they wanted open, independent systems that were easy to use, well priced, and basically far better and more modular than what was available on the market. So they turned to us and they said, well, what do you know about check processing? And before we knew it, we were on a plane back to the US to find a product, a solution, and learn about the business and implement that in Zimbabwe to complement our information management solutions. And that was how we sort of got into the banking space and into payment solutions, which was great.
So you basically brought the solution, the software solution, to a bank that ran their whole backend essentially.
Correct. So in the early days, it was simply check processing. And we had very humble beginnings. The concept being very simple. Our systems had to be easy to use. And we really now were sort of in a David and Goliath situation where we were taking on the big US multinationals. So the solutions evolved from initially basic information management and scanning solutions to check processing and into the payment solution space. We had a few lucky breaks. We managed to get the Pan-African deal for Barclays, which was a great breakthrough for us. And then in time, our systems evolved. We put out the first check truncation solution in Africa, which meant that we could now settle check clearances almost instantaneously, which was the third of its kind in the world, and the first in Africa. Oh, this is back in about
or the range?
2002. It was about 2002.
Okay, so but why does it still take 3 days for my check to clear here in the United States?
Well, that's because the banks are sitting on your money and the business case doesn't make sense for them. The technology is out there. They could clear your checks instantly. It's just that the banks are a bit of a fraud. I mean, how the banks run, how money is created, the concept of money itself, it's all one big lie. And we'll come into that
Who's
in a
to
minute.
blame though? Is it the state itself or is it the banks or is
Well,
it
it's
both?
both. I think, ultimately the banks and the government are in cahoots together. The government uses the banking system as a means to control the population, and that's not going to go away. And we've seen more recently since 2008 in the financial crisis that, no banker goes to jail and they just get a slap on the wrist and worst case scenario, a small fine. So that's not going to change, but a lot is going to change globally going forward. Um, so you're just going back to the business. We built the business up over 20 years. I think today they're in about 30 countries across Africa. It's the largest payment solutions provider in Africa, a company called Cybrin. Um, but the business grew to a stage where I'm an entrepreneur at heart. I'm not corporate, and I realized that I needed to get out of this corporate environment and challenge other opportunities. Um, So back in about 2013, I sold the business to a listed company on the Johannesburg Stock Exchange. We were their largest acquisition at the time, and I was also very concerned about the banks, the central banks, how they treat their populations, how they cheat us, um, and so I was very very concerned right back then, about what I learned about money. And I think, suppose to this day, that's really what's moved me into you know uh, cryptocurrencies, Bitcoin, hedge funds, and prior to that, Bitcoin mining. So,
What did you learn?
well, I think generally the population has no idea what is money. They think that those notes in your wallet is money, and in fact, it's just currency. So we really need to sort of all educate ourselves on what is money and what is currency, and really the difference between the two. And that's exactly what happened in Zimbabwe. And so many people have become financial prisoners in Zimbabwe from not knowing the difference and not taking action. And I'll come on to that a little bit later. But one of the main reasons we're in this financial mess globally is that people think that paper, fiat currency, is money, and money has to be certain things. It has to be a medium of exchange. It has to be a unit of account. It's got to be portable, durable, divisible. It's got to be fungible. In other words, each unit has to be the same as the next. But most importantly, which most people don't understand and all they forget, is that money needs to be a store of value over a long period of time. And I guarantee if you speak to wealth managers or your banker or even your accountant, possibly, they won't understand the difference between currency and money. And that's what scares me. Um,
Oh, they're just salesmen.
Absolutely, 100%. They're looking for their fees. Those annual management fees, that's what they're after. And I suppose because governments can print more and more money of it and dilute the currency supply, it's constantly transferring wealth out of your pocket, out of your bank account to the governments and into the banking system. And that's the reason why, for thousands of years, for 10,000 years, gold, silver, now Bitcoin are the optimum form of money because of those properties. It's an easier medium of exchange. Obviously, gold, silver, now cryptos are a great store of value in a very, very small area. I mean, you can have all of your wealth sitting on a little Trezor, cold storage wallet or a ledger wallet. It's great. Um, and obviously, Bitcoin has very similar properties. Globally, it's pretty much the same price. Although in some countries there is a premium. It's all about supply and demand through the exchanges. But it's very portable. You can it's the ultimate money in my mind, really. And Bitcoin in one country, generally speaking, in another will buy you the similar amounts of goods and services. Um,
Sure, sure. I mean, those are the most important properties that are needed, and it's one of the reasons that the dollar still has its global reserve currency because you can go anywhere in the world and let's just say you want to purchase a car.
yep.
If you hand the person dollars, any country in the world, you hand the person dollars, they're not going to not take it. They're going to take it for the sale. But if I'm in Mexico and I'm selling a car and someone hands me Russian rubles, I'm probably not. I'm going to go to the currency exchanger guy and convert it into dollars or pesos.
Exactly. Exactly. And obviously, this is, we've got inflation today. I mean, the fact that Bitcoin is limited to 21 million, I mean, that's so powerful. We haven't even seen the benefits of that yet. And I think only once the institutional money starts coming into the space will that really be realized. But, the whole concept that, things like, for example, the Federal Reserve. I mean, Federal Reserve is largely privatized by three major families. Yes, the other major banks have a very small stake in the Fed. It's never audited. But most people don't understand that. They think it's controlled 100% by the government, and that's not the case. Um, we've lost all idea what money's all about, and that goes back to when the Fed was created back in 1913. It's not money has not been a currency has not been a good store of value since then. It's depreciated. We've lost what 95, 96% of its purchasing power. Whereas if you look at Bitcoin on the other hand, in the last 10 years, it's by far the best performing asset out there, and it's a real store of value. Um, so yeah, I mean, the history of money is quite alarming, and people need to sort of wake up and understand, where did money come from, and what are the risks within the monetary system. You know, um,
Can anything really be money? I mean, you told me stories how you travel once a year to the auction to purchase beautiful animals for your reserve. You have giraffe and you have all these different animals um, in South Africa. Well, those have value. Um, can those be considered? Can it be giraffe be considered money?
no, I don't think so because they're not very portable. They're not a great
No,
easy.
they're not.
They're difficult to catch. You need a helicopter. You need to dart them. So those are some of the characteristics which probably don't make it great money. They don't last forever. And a giraffe at some point dies. Yes, they will reproduce, hopefully, but those are the sort of characteristics that we do need in money today and sound money today. And as far as I'm concerned, money has to be a long-term store of value. And I don't know if you remember back. I mean, maybe you would have been too young, but I remember certainly. I'm a bit older than you, Charlie. But I remember when growing up,
A little bit.
growing up as a kid, I remember that all the notes used to say on them, "I promise to pay the bearer on demand." And essentially, what you could do is that evolved way back from the jewelers. Way back in the day, the jewelers who used to take people's gold and silver and give them a receipt for it, they became the bankers, and it evolved into that over hundreds of years. And what they soon realized is that they could rehypothecate those notes and overstate how much money there was in the system, and that's what led to inflation. But going back to prior to 1971, I could take my $10 bill into a bank, and it said on the note, "I promise to pay the bearer on demand," and I could collect $10 worth of coins. I mean, that's obviously all gone now. The
I
idea
can't
that
do that today.
you can't do that anywhere in the world. I mean, every currency in the world is now a fiat currency. In other words, it's dictated by confidence in the government, and only that. There's absolutely nothing backing the currency whatsoever. So, I mean, countries have all started out with sound money, and I mean, even more recently, even in countries like Zimbabwe, where they moved across to the US dollar, sort of overnight, the government looted those coffers and issued something called a bond note, or that was just another fiat currency backed by absolutely nothing. Within a couple of months, hyperinflation and collapse of the currency, and I see that happening to all currencies going forward. I don't think any country in the world will manage to escape what's coming. It's pretty hectic what lies ahead of us down the road. Um,
Most people don't understand what really hyperinflation is or what happened. They know that you can go to eBay and buy $1 trillion Zimbabwe note,
yeah,
and it's all cool and fun and everything. But from your perspective, being on the ground, like, explain to us what happened and give us um like, as if we could imagine it, like, what was the weather that day? I mean, what didn't happen over one day, but you kind of see my point. What was it like being in the midst? You were in that country, you were working in that country, and the direct country south to it. um you were there. Most people weren't. What was that like from I consider you a monetary theorist, um from that perspective.
well, it all goes back to the government of the day. I mean, at the time, they needed power. The country had gone through a war, and the people who had been fighting for their freedom, for their independence, now was saying to the politicians of the time, to the Robert Mugabe regime, we need compensation for fighting in this war. We need monetary compensation. And this has happened through history in many instances, including the US. But let's carry on with Zimbabwe. So at the time, the war veterans who had fought in this war demanded a one-off payment of $50,000 and a pension for life, and the government granted them that. But in order to give them this compensation, the government clearly didn't have the money, so they had to print the money, which we know how that ended up. It ended up with hyperinflation. You know, $50,000 at that time was quite a lot of money. Within sort of a year or 18 months, you couldn't buy a Coca-Cola for $50,000. That was more like $1 billion. So when you overinflate the currency, what happens is you basically have a greater, far greater supply of currency chasing a fixed supply of goods and services, and that's always going to end badly. That's going to hyperinflate the currency and collapse it. And every currency, bar none, in the world have gone to zero. And I mean, even if you look at the US, I mean, through history, there's been wars. You had the Revolutionary War, where in order to pay the soldiers, this is back in the US, the Continental War, exactly the same thing happened. They created a proxy, very much like they did in Zimbabwe. They've created a proxy to pay the troops, and that was called the greenback. That's where the term the greenback came from. And essentially what happened is it created hyperinflation and collapse of the currency. Again, that's where the saying, I don't give a continental, comes from. It comes from the Continental War in the US. So this has happened. This has happened time and time and time again, and it happened in Weimar Germany after World War One. In order to pay their reparations for World War One, they had to pay, and they didn't have the money. So what did they do? They printed it and hyperinflated it, and again led to hyperinflation and collapse of the currency. So it never ever ends well. And I think, closer to home right now is you got to look at what's happening with this quantitative easing, and if you go back and you see that the world currencies are being obliterated through inflation, printing all this money, and they're simply just going to continue to lose their value, and there's no way of avoiding what's coming down the road. The only thing I can say is you've got to find a place to store your wealth. Keeping it in the banking system is very, very concerning for a number of reasons. You need to really understand, firstly, what is money? A lot of people don't understand the risks of the bank and the risks of the current monetary system. Yeah.
What are those risks? What is money? And you've basically built banking software for what, a dozen countries in Africa. What is it? How are they running behind the scenes? Like,
Okay. Well, I think.
What is it like?
Okay, so just talking about firstly, what people may not understand about money. Firstly, there's two things really that come to mind. I mean, the first thing is the money that you have in your bank is not your money. And secondly, how money is created. So let's talk about money in the bank. I have a lot of mates who often say, well, I bank with bank XYZ and I've got money offshore with this bank and that bank. But the reality is that money is not their money. It's the bank's money. The minute you deposit money into the bank, it goes onto the banking system, the bank's balance sheet as their asset. If you deposit 10 grand and tomorrow you try and draw $5,000 in cash out of that bank, they're going to try and stop you. They're going to try and think you're either an arms dealer or a terrorist, or give some other funny reason why you can't draw out the money. And the reason being is all of their money is tied up in debt and paper loans. And they're also trying to protect themselves from a run on the bank. So your money is actually the bank's money. You are simply a creditor of the bank. So that's the first part. Okay.
What would happen before we get to the second part? What would happen before the FDIC existed if you put your money in a bank? It's not your money. The bank's using it to loan out, and the bank failed.
Well,
you wouldn't get your money back, right?
Well, going back, they were insured. Okay, that's all changed. We have insurance now of only of 250,000 only. Prior to that,
so banks had private insurance.
Banks are insured their deposit of up to 250,000. So if you've got $10 million in there, you're going to get $250,000 back if they collapse.
It's great.
So it's not great.
Great haircut,
so it's not a great business model. Okay. And then the fact is, how is actually money is actually created from within the banking system? That's very concerning. I mean,
It gets printed.
it's printed out of thin air. It's absolutely. So let's take Charlie Shrem. You deposit a round number. Let's work in round numbers here. You put $1 million into bank XYZ. Okay. What they then do is they take that $1 million and they put it on their balance sheet as their asset. You are simply a creditor of the bank. And then they'll lend out that money on something called a fractional reserve lending system on a 10-to-1 basis. So for your $10 million, they'll lend out $1 million. They'll lend out $10 million in the form of mortgage debt, credit card debt, and student loans, whatever the case may be. And they're going to charge interest on the full $10 million, which is actually your $1 million originally. And when that $10 million is paid off, guess what? They'll lend out $100 million and so on. And that's all against your initial $1 million of hard-earned cash. So that's really how money is created. And since then, we've seen in 2008 with the credit default swaps how banks are bundling all these debts together, and they got out of hand and ended up in absolute almost calamity in 2008. And quite frankly, they should have let the whole system collapse. But since
Really?
absolutely, but since then, it's got a whole.
So
Yes.
let's talk alternate history for a second. Let's talk, what would have happened if we let it all collapse? Where 10 years later we're sitting here, what would the world have looked like?
Well, I mean, we would have had some pain. There's no question about that. And the world actually needs to go through a monetary
Short-term pain
collapse.
is good though.
Uh, Everyone tries to avoid pain. That's the problem. They want to kick the can down the road a little bit longer. But the world would have not gone back to a debt-based society. But what have they done? They've actually made the situation so much worse than it was. Okay, I mean, since then, derivatives have got out of control. It's a major problem, and there's a lot of things pointing towards an economic collapse. If you just have to look at history, it's going to repeat itself, and it always does. So there's a lot of lessons we can take back from what's happened in the past. Debasing the currency to pay for public works is never going to end well, and that's just going to keep repeating itself. So I don't think there's any question that we're headed for some sort of economic collapse in the future. Obviously, the death of the dollar and consequently a new monetary system. So like I said, sort of a currency normally lasts for 30 to 40 years, and at that point, there's a new monetary system. Okay, today we have a fiat currency, a debt-based society, and that won't reemerge, I believe, in the future. We will either go back to some sort of uh, currency-backed solution, either with a basket of currencies backed by precious metals to some extent, or some sort of crypto-based solution. I'm not sure how the crypto one would pan out, and we'll talk about that further, because I think what will emerge is nations are going to bring out centralized cryptocurrencies, and most people are going to be none the wiser. But let's bank that for now. The other thing that leads me to believe that there's an economic collapse is inevitable is the fact that the petrodollar is doomed. Any country that has threatened to sell its oil in anything besides the dollar has been attacked. I mean, think about Iran, Iraq, Afghanistan. Those are just to name a few. Um, Also, since 2008, there's been massive amounts of quantitative easing. It took 200 years to go from no dollars to $850 billion. And then they started this QE and, started printing $1 trillion a year. And this is not a good situation. People are going to get worried. It's going to lead to hyperinflation, and people are going to start looking for other areas to park their wealth. And those will include cryptocurrencies, Bitcoin, and precious metals, I believe.
Well, most people are gold bugs. You've been a big fan of
Yep.
silver. Why?
Well, if you think back, silver was sort of demonetized in 1973, and really it's used in jewelry, but it's been demonetized globally. It's not deemed an asset. In fact, recently it has been recognized as an asset again. But if you look at silver,
This is silver we're
yeah,
talking about,
absolutely.
right? Oh, we're
No,
talking
no,
about
I'm
gold.
giving a synopsis of both. Silver, on the other hand, let's go back to 1980. Silver was at $50 an ounce. It was practically only used for photography. So fast forward, so 39 years ahead, it's now used. It's probably the most important strategic metal in the world. It's used in every cell phone, every laptop, every motor car, every television, microwave oven, you name it. It's used in the medical space. It's used for solar. There's thousands and thousands of use cases for silver. And on top of that, there's very small amounts of above ground reserves. So one would think that anything that is rare and is often used on every day, the price is going to go through the roof given supply and demand. But silver's been pushed down by the likes of the big banks and especially JP Morgan. They've pushed the price of silver down and shorted it extensively from $50 an ounce down to about $14 an ounce today. But, and this basically sums up my concern with the banking system. We lose faith in these banks because they tell a lie. JP Morgan has shorted the crap out of silver from $50 an ounce down to $14 an ounce. And guess who owns the most silver in the world today?
JP
700
Morgan.
million ounces of silver. And that's the lie.
Why? Why would they
Well, they
do that?
know that it's a very undervalued asset. I mean, if you have a 99% sale at your local stores, people are going to be banging the doors down to get in there. But because silver's been shorted and might not look great on someone's balance sheet at the moment, people have generally stayed away from it as an investment. Most people look at the Dow Jones and think I'm making massive returns. That's where I'm going to put my money. But I can honestly tell you when the system does collapse, uh, precious metals and cryptocurrencies are going to fly. Money is going to find a new home in these safe haven assets, and they're going to go through the roof, especially once the institutional money comes into the space. So silver's been an interesting one for me, and I'm holding it, and I believe long term it's only got one place to go. I mean, if you think about it logically, throughout history, the gold to silver ratio has been 15 to 1. Today, it's closer to 80 to 1. So it's a screaming buy. Um, And coming out of the ground at the moment, it's a byproduct of various different mining activities, gold and copper and zinc. And about 9 ounces of silver are coming out of the ground for every 1 ounce of gold. So, assuming that gold is fairly priced at the moment, silver should be at about $150 an ounce, but it's at 14 odd. We know that gold is undervalued. So, a lot of people are suggesting that silver should be valued anywhere between $700 and $1,000 an ounce. So it's a screaming buy right now.
During I agree with everything you're saying. And we've had those conversations before, and I've been bitten by the metals bug, as you say, the gold bug or the silver bug, and it's definitely a great and this is what people say, it's a great hedge against the world. But when I read, this is what I don't understand. When I read the history books and I say, okay, I want to look for examples of when owning gold or silver were good, when the world has done something stupid, or a large government has done something stupid, or major wars broken out, owning gold or silver was a good thing. Um, and I've kind of found the opposite, which is what I don't understand. I look at two examples. I look at World War II, and the price of gold went down a lot because you had an influx of gold on the market from Jews that were fleeing Europe, and then from Germany selling gold in order to pay for their, or almost all these countries selling their gold in order to pay for the wars. That's one example. Then I look at um, 2008. I look that as an example, when the world had its most recent recession, and then I look at a smaller example as well, the Russian Revolution, um, 100 or so years ago, when the Bolsheviks took over, and they took all the gold and they sold it in order to pay for their new country, and the price of gold collapsed, and all these people holding gold basically lost out. What am I missing here? Why am I wrong?
Okay, well, I mean, I think in the short term, there have been instances where that has happened. But if you think about it logically, if you go back, sort of 100 years, barrel of oil back then cost you very similar to what a barrel of oil in terms of gold would be today. Whereas the currencies themselves have all gone. They've come and gone. The dollar, number of times, certainly the Zimbabwe dollar, most currencies have actually lost all of their value. So for me, the question is, where do you preserve wealth? How do you preserve wealth? And it can't be in currencies because they are manipulated. They're printing it out of into oblivion. And I see precious metals as one of the hedge. I wouldn't say to you put all of your eggs in one basket. I really think that there's a massive opportunity for Bitcoin in particular going forward. The fact is that there's only going to ever be 21 million. The fact of it being deflationary. These are very powerful factors and are going to make its price go way higher in the long term. But it depends how you look at it, Charlie. I mean, if you're looking at it from a speculator's perspective or as a store of value. Um,
Well, I'm looking at it as a
so
store
I
value.
still like precious metals. Yeah. That's why I believe that silver has far more upside than gold. There's very, very big shortages globally, and it is being manipulated right now. On paper, it's being greatly manipulated. They're trading in 1 day or 2 days on the COMEX, and what they mine in a year. So, that is all going to come to an end where they fail to deliver. If someone demands their gold, their physical gold, and they can't deliver, well, the game's over, and that's not too far ahead.
But when you keep your money in precious metals, um, you can't really use that money to work for you unless you
Correct.
borrow against, and there are companies locally, companies here in Florida that you can borrow, at 7-8% against your gold, and then use that money to buy real estate or do something where you think there's more upside. Is that something worth doing?
Absolutely, it's all about hedging. So I know in Singapore there's an organization that you can buy precious metals. You then can leverage your precious metals and pull out 50% loan to value and put that into any other investment class that you see fit.
What's the like interest rate? Is it something doable or
No, it's very affordable. It's 4 or 5% per annum.
really?
And what people are doing is they're buying silver, then they're hedging against that, and they're pulling their money out and putting it into cryptocurrencies. And that sounds like a great time to be investing in cryptos right now. You buy low and sell high. Obviously in 2017, everyone was jumping into cryptos. In December, it got completely overbought and needed a pullback that was healthy for it. But now we've seen the price come back, and I think if we're not at the bottom, we certainly near the bottom.
So
So it'd be a great time to be buying right now.
it's early May right now when we're recording
Yeah.
this. It's May 2019, and almost literally about a year ago, I was in South Africa with you, and
Yep.
the price. I remember we were waking up every morning and we were like in tears because the prices were just going to shit. Um,
Yeah.
that's when the bear market was really. That's when people started really saying, okay, the price is about to go through some sort of bear market. And here we are a year later. What was your year like? Did you lose faith in crypto? Did you did you get nervous? How did you feel?
Yeah, I think all of the above. I learned a lot about myself, like
Even hair
everyone
left?
did. I learned a lot about myself. I realized a few things. I realized firstly that in 2017, I thought I was a fantastic trader. December 2017,
Yeah,
things were
we're all
going well.
fantastic traders.
Fast forward 6, 8, 10 weeks, and I realized a few things. I realized that I'm really not a great trader. I don't possess any of the qualities of a trader. I'm too emotional. I'm too impatient, and that's when I started looking for an organization where I could park my portfolio and have someone professionally manage it for me. And there wasn't anyone out there who I could turn to, and hence we formed the hedge funds which we have today. But yeah, I mean, I've been in the Bitcoin space and cryptos since sort of 2013, and it's been a great story since then.
So what is your fund doing now? You basically started this fund to do something that you needed yourself.
Yeah, so basically, I started two funds. Okay, we've got the digital asset fund, which is a crypto fund. Interesting strategy. It's a long short strategy. We're using technology. We're using artificial intelligence. We have an algo which we've bought a 50% stake in a company that's been around for about 15 years. Interesting story. Quite a character who's developed the software and built a great little business. Was involved in MI6 for a number of years, and then used that software back in the day for sort of human trafficking
Well, what are you
and
talking about?
the artificial intelligence company that we bought a stake in. Okay.
Yeah.
So I decided we wanted to use artificial intelligence as a means of taking the emotion out of our trading. So we put together this fund where basically we've registered in the Caymans. It's an offshore fund, as 85% of other funds globally are nowadays. And the whole idea is we use various strategies powered by artificial intelligence, which manage our risk and really the key driver of performance in volatile markets. And essentially, what we're doing is we're managing volatility. We're trading volatility for our clients, but in a regulated environment. So yeah, I mean, it's been exciting. We've got the two funds. We've got the digital assets fund, And the other fund is our FX fund, which again, employs the same strategy. We're using the algo to trade volatility in the FX markets, which are very liquid, and give a return for our clients. So it's still early days. We've spent sort of just over a year building the business and trying to get the foundation in place, which it all takes time. And I suppose building a fund during a bear market is never easy, never fun. But it's we'd be kicking ourselves right now if we were in a massive bull run and we didn't have all our bits and pieces lined up. So yeah, it's been interesting. It's been a long journey. And we started to build a solid team of finance and technology people, which guys who had a sound understanding of the technology and the markets. And we've decided for Ecstatus Capital to build this a Cayman domiciled fund. The authorities there were able to structure our fund offering both affordably and efficiently. Our main business is based in the UK in London, and we have our independent fund administrators there, which is our place of effective management. Blockchain and global IP. We wanted our strategy to across Europe, focusing on sort of small family offices, high net worth individuals, fund of funds. So that's really where we're at. It's an exciting space, and I think the future's looking really good ahead.
So tell me about nation-backed cryptos. We hear that term a lot.
Well, that
Venezuela did it.
that scares me. I think what's going to happen if we look at what I think could trigger a collapse first and foremost, and how this blends itself into national cryptos. Let's take, for example, the largest bank in Europe being Deutsche Bank. They've got about a $65 trillion derivatives exposure, and then you've got Commerzbank, which has got about a $55 odd trillion derivatives exposure. My concern there is they've recently tried to bundle these two toxic banks together in Germany. So you've got two banks with a combined 120 odd trillion derivatives exposure. And to put that into context, the GDP of Germany is around 4 trillion a year. And that's never going to end well, Charlie. When they fall, the domino effect from counterparty risks with all the other retail banks globally is going to be horrific. And I think that's where you might see all of the retail banks going down together. They won't just roll over and accept that they've messed up the financial system. They'll clearly blame it on some black swan event. But I think that's what's going to happen, and we are staring at a massive global crash ahead. People are obviously going to lose confidence in their currencies, and are in the short term will move to safe havens like precious metals and cryptos.
Will that be like an instantaneous thing we just wake up to, or it'll start to happen? Will we see the warning signs and try to reverse it?
Well, I think already the warning signs are out there. If you just look what's happening in the emerging markets, if you look what's happening in Venezuela right now, there are a lot of signs around us every single day. The fact that interest rates are near zero, they can't afford to put up interest rates in the future. That'll trigger it in itself. So I think we are very, very close to this happening, and people still have time to get their house in order, but they need to be wide awake. So I think what you're going to find is, I don't believe central banking is ever going to go away, and that's the means by which governments control their population through the monetary system. We saw Jamie Dimon a year ago poo-pooing cryptos, and obviously recently with them announcing that they're bringing out a stable coin, which is hilarious. But to answer your question, national coins, a lot of people will fall for them, but what they don't realize that they're going to be centralized coins controlled by a central body, whereas the likes of Bitcoin are completely decentralized through miners globally who can't be shut down. You can't shut down every miner globally. And really that is the key strength of what Bitcoin stands for.
Basically, from what I understand, nation-backed cryptos are literally the same thing as money in an online banking account today. It would be the exact same thing.
Absolutely. Much of the same, exactly. And that's why there's no future for it.
But
they will just simply rehypothecate, and they will print more and more and more, and it'll be the same as what's happened in Zimbabwe. It'll be the same that's happened in every country with their fiat currencies.
But I feel like it's going to be used as a ploy, because as the popularity of crypto grows, the populations of the world are going to say,
Yeah.
we want to do this and we want to be involved in this and hedge on this. And when you remove the power of money, when you remove the ability for the governments to control the money supply, that's as if not more important than controlling information. Governments are going to feel under pressure, and they're going to launch their own cryptos to say, here's the crypto, here's the dollar back crypto, here it is, and most people will be satisfied. How do we prevent against that?
Well, I mean, it's ignorance. If you look at most people today, they think that our currency, our fiat currency, is backed by gold. They've got no idea that it's backed by nothing. It's backed by confidence in the Reserve Bank, which is a private cartel. So most people today are ignorant of the fact that our fiat system is doomed to failure, and that's the concerning thing. We need to educate people, and we need to get the message out there that the current system is seriously flawed. I've lived through this firsthand. Growing up in Zimbabwe, we've had 20 years in the payment solutions game where I could see firsthand. And it opened my eyes to my why. So my why for being in Bitcoin is the fact that it's limited. There's so many factors I'm in Bitcoin, but the main thing is the current banking system being so severely flawed. We don't have control of our own wealth. I don't like the fact that I have to ask my bank manager and justify my withdrawals and have my card either denied or accepted. It's too much risk. I don't like the fact that we are all forced into the banking system and that there's a war on cash. I mean, you just look at India a few years ago. They took away the two highest denomination of currency, and straight away 85% of the currency in circulation fell by the wayside. I don't want to be controlled by that. These central banks, they're private cartels. They look at their own agendas. What happens is, countries like Iran, Iraq, they're all opening up central banks right now, and it's the same people who are involved in the Fed who are controlling these cartels. Just have to look at 2008. I don't think any bankers went to jail. I mean, since then, many banks have done massive criminal injustices. They've manipulated LIBOR rates. They've manipulated interest rates. You know, they're working with governments primarily to control the population. And so I wanted my own financial freedom. And when I heard about Bitcoin and read Satoshi's white paper, I knew it was a no-brainer for me. We'd experienced hyperinflation, the collapse of the currency in Zimbabwe. We'd experienced being chased off our farms and having to relocate to a more stable country. And I learned about the issues around fractional reserve banking and debt. And you know, more recently, we've seen the establishment of the BRICS Bank, which is Brazil, Russia, India, China, and South Africa, and that's challenging the World Bank. And this really means to me that the dollar's on borrowed time. So,
Do you think replacing the dollar with something else is a good idea like that? The same type of
no, not at all. I think we need a completely new financial system. We can't have a system right now where it's all backed by debt and there's nothing sound behind it. The world we need to have some sort of blockchain technology, and I think that's where the underlying technology of blockchain is the exciting thing for me. Not only Bitcoin, I mean, who knows, in the future Bitcoin may not emerge as the winner here, but certainly what I do know is blockchain technology is here for keeps, and it's all about trust. And I've had a lot of confidence in the few conferences I've been to lately. Even going back 2 years ago, I was at Consensus in New York, and interestingly enough, it was sponsored by the Dubai government in conjunction with the Australian government. And when these governments are looking seriously at blockchain, I really get a strong feeling that the underlying technology is here long term. So yeah, I mean, the fact that I can control my own wealth and my own wallet with no counterparty is really a very powerful thing, and one of the main reasons that I'm involved in cryptocurrencies today. So it's been a no-brainer, and as an alternative asset class, it's been great. And a few years ago I was involved in mining, which again was very exciting. Bitcoin mining.
it's interesting that you live in the country that exports the most gold in the world. And does South Africa still export the most gold in the world?
No, I think we're exporting a lot. I don't know if we're still number one. Obviously the Chinese are the greatest producers of gold in the world, but they're also the greatest importers. And if we just look across Africa, most of the mines nowadays across Africa are being bought up by the Chinese. So they can see what's coming. They're investing very heavily in gold. And yeah, as are many other countries asking for repatriation of their own gold. I mean, Germany have done that. Other countries more recently have done the same. So it just paints a picture of where
And
this
so
whole thing's going to go.
you decided to get into Bitcoin mining. Most people just start holding. Why did you get into Bitcoin mining?
Well, luckily it was in 2014. It was, in fact, it was after the Mt. Gox hack. I got exposed to Bitcoin mining. My initial experience was in a sort of a cloud mining setup, which I could see after a while that I needed to control my own destiny. So I was fortunate enough in 2015 through some relationships that I had. I was introduced to a mine that was for sale in Washington State, um, and in the early days back then in mining, it was lucrative. But obviously, as time's gone past, it's got more difficult. The number of miners has increased, and as you know, there's a fixed supply of Bitcoin rewards every 10 minutes. So basically miners are getting rewarded with Bitcoins for every 10 minutes. Back then it was 25 Bitcoins every 10 minutes. Then we had the halving in July 2016, down to 12 and a half Bitcoins every 10 minutes or so. And again, next year we're going to witness another halving. So at that time it was lucrative, but there's another challenge which is called difficulty. And the easiest way to talk about this, I suppose, is imagine as more and more machines are competing for a fixed Bitcoin rewards, the horsepower, the processing power that you need to achieve the results increases exponentially. So, as Bitcoin became very popular in 2017, a lot of people were taking profits and buying mining equipment and competing for Bitcoin rewards. So, we had a good run. Today, my miners have been moved out of Washington State. I've actually moved them back to another location in South Africa. Not that lucrative at the moment, but we had a good run, and yeah, it was an interesting time in my
But
life.
you're
And
you're not mining for profits for today. If you feel that Bitcoin is, the future and going to grow in value and price, then it doesn't really matter. If you're using your machinery, you're just charging electricity, and you're getting more Bitcoin. That's the best situation.
well, that's the name of the game. Long term, it's really about trying to accumulate as many Bitcoin as you possibly can, and that's my strategy. So the rewards have slowed down a lot. Power is not as cheap as it used to be, so it's not as viable. But to answer that question, fast forward the predictions many people have had 5 years down the road, and I don't even want to go there with a prediction of my own, but then it will be worthwhile. Just hang on to
What is
those
your
Bitcoin.
prediction now? You got me excited.
You've put me on the spot, Charlie. I want to ask you that question for yourself. What do you
Well, I would
think?
just say that it's higher than it is today.
Absolutely.
Sure. I look at it like this. I've been through so many of these bubbles and bursts, and what I can say is that usually, or at least in the past, the it's exponential growth, right? So, or
Yeah.
if you look at it on a linear scale, you go for so let's start at some of the really early ones. The price goes from 10 cents to a dollar, and then it goes back down to 20 cents, and then it goes back up to a dollar, and then
Yep.
over, and it goes back up to $10, and then it dumps again back to two, and then I'm missing one or two here and there, but then it goes from 2 to 36. And that bubble I actually remember very clearly, because as the price was going from 2 to 36, I had just not felt I hadn't had enough in the one right before that. So
Yep.
I went all in at $32. I bought a ton of Bitcoin, and then the price dumped back down to like $2. So I was wrecked, you
Yeah.
know. Um, and then the price went from, and I sold a lot, and the price went back up to like $200. And then we all know what happened after that. I went down to 100, and then went back up to 1,200, and then went to 20,000 eventually. So if you just look at it from a scale of that, then you're looking at easily over $100,000, $200,000 per Bitcoin, easily.
Absolutely. Absolutely. I mean, that's a minimum, I believe, for sure. I mean, just look at Ethereum. I mean, Ethereum in 2016 was about a dollar, give or take, in the early day, in the beginning of 2016. It went up to $10. Bitcoin was in the region of 1,000 in January 2017. In the space of 12 months since then, Ethereum went up 120 times and Bitcoin went up 20 times. So lots can happen. It can be very exciting. It all depends when you get in. I just know one thing: you need to buy low and sell high.
Yeah, it usually works. You just gotta time it really right. You gotta time it right.
Absolutely.
But don't you get emotional with crypto too? I get so emotional with it.
I'm far too emotional. That's why I've decided I'll leave it to the experts in the fund and they manage it for me primarily. So we use
Is this fund open
technology,
to anyone?
and the fund is open to people outside, accredited investors out of the US. There are certain criteria. So yeah, the fund's open to investors, accredited professional investors. There is a minimum investment amount, which is $100,000, and that's sort of governed by the Caymans. It's not something that we have control over. But I suppose that's there for a reason, to protect people. They don't want to have happening what happened in the ICO craze of 2017, 2018 happening in the future.
So I want to ask you about that because, what you just said, offhandedly said without even thinking, kind of totally symbolizes where we're going and from the world. So what you just said was accredited investors outside of the US. So the accredited part is very important, obviously. You don't want people
Yeah,
betting their house on these things. And that's a consumer protection rule, and I like that rule. But the outside of the US thing, what that basically that means is I can't participate in your fund. And that's hard because it used to be where if you wanted to do business in the United States, you had to pay to play. But now, like,
yeah,
in your words, the cabals of the United States, these central banks and everything, um, they don't allow it. And so what most countries, because we're living in a more globalized world, other governments like the Cayman Islands are just saying, you know what? We just don't want to deal with it anymore. And there's enough business outside of the US. So we're just going to basically say no United States customers. And in the crypto space, you see that all the time. You see that where it used to be that if you're a US citizen, you can work with and do business with any country in the world. Now it's like almost the opposite, where you go to a website,
absolutely.
you have to check. It'll say, oh, United States citizen, you can't do business with us.
For sure. I mean, I think that's why you see a lot of people who are interested in the cryptos. They're moving to Puerto Rico, to Malta, Belize. They're moving out of the US. They want to become citizens of the world. They don't want to be controlled by these governments to the extent that they are anymore. The world's a smaller place, so yeah, absolutely. It can't be easy being an American right now. I feel for you. I've been through it. We've lived through all of the price controls, currency controls, and the controls that our governments put on us.
Will that
So not easy at all.
will that change? Will we eventually get to a point where we're in a globalized enough world where people can go to like jurisdiction shopping and eventually do business with each other? Are we gonna see a more globalized world in 10 years from now, or are we gonna see a less globalized world?
I'm very concerned about this globalization. It's a massive concern for me.
Why is it a concern?
I
Is it
think
a good thing?
Well, I think countries need to control their own destiny again. I mean, if you look at the EU, the European Union's an absolute mess. And just talk about Brexit for a minute. The fact that Britain want their own sovereignty back to row their own boat, I think is a good thing. For hundreds of years, they fought wars, and, the whole of the EU is in an absolute state. I don't know if you need to be part of a sinking ship. Um,
Why not try to patch the whole of the ship instead of jumping off of it?
I don't think that's the globalists concern me. The fact that it's just more control. It's more control for, the EU, the World Bank, the IMF. These are all the same cartels. Then it never ends. It's not going to end well. Where you and I are going to be robbed of our freedom and our time and our money and our wealth. And that's what scares
Do you want to go back to a world though with nationalism and independence where we're all fighting wars with each other over what?
Well, I think there's other ways.
Over
There's
nothing?
other ways to handle it. I don't think that's going to solve anything. But certainly, having one European Union and one or two unions in the world, it's an absolute mess. That hasn't worked, and I don't think it is going to work.
So you
So,
would you say that you believe in economic cooperation and not like political cooperation, or is it the opposite?
no, economic, definitely, 100%. And I think the fact that, whether you for Trump or against Trump, the reality is in the world today, we've got two leaders in Trump and Putin who are both nationalists. And the fact that they want to make their respective countries strong again is a good thing. They need to get their local industry booming again. You can't outsource it all to China and then be at the mercy of the East. That's not going to end well either. There is going to be a war on their currency, and it's unraveling as we speak. What has to happen is the US has to gain strength. They've got to get on top of their debt. They've got to balance a budget, and that hasn't happened in 30 years. and they need to go back to sound money, which they've clearly lost sight of. There's too much debt.
Simon, thank you so much for coming on the show. You've definitely opened people's eyes to where we are in the world today. But I want to ask you one last question. Leave it with this: what can people do today to preserve their wealth or their money that they're earning? What would you if people who don't want to take too much risk in anything, what would you suggest they can do today as they're listening to the show?
Well, my advice to anyone today is just make a start. Get some money or some wealth out of the system that you can control yourself. I'm not saying put all of your eggs in one basket, but buy some Bitcoin and a bit of precious metals. And you can even do a combination where you can buy some, for example, some silver. You can leverage that and buy some Bitcoin. But the reality is you need to start. So, Charlie, thanks for having me on your show. It's been great catching up, and look forward to chatting again.
Yeah, I can't wait to have you again on the show. Thank you so much, Simon, and hopefully I get to see you soon.
Go well. Thanks so much.
Hey, everyone. Thanks for listening. New episodes of Untold Stories go live every Tuesday at 7 a.m. EST. Links to our Apple and Spotify channels are in the show notes. You can also follow me on Twitter, Charlie Shrem, to continue the conversation. See you next week.